The market's still very much trading in the red, losing 1/3%, but it's sideways trading really. It's just battling to get to that 4,000 new resistance level, one would argue. Many investors just holding on to their positions, continuing with blue chip sales, or just sitting on the fence.
Basically, being a week after the end of a quarter, most institutional investors are not really in the market, just trying to do their reporting, getting their books in order, and getting their strategy for the second half of the year in place. And currently, you are seeing a huge amount of foreign investors coming in on the buy side, basically trying to represent that there is some value in a certain number of counters that they are targeting at. But with the economical outlook still uncertain, with pessimism entering into the minds of most investors because of macroeconomic fundamentals that are looking the other direction, we will expect the market to trade sideways for some while.
I mean, obviously now the quest is on for foreign buyers because they seem to be the ones driving this market. And although they pile into counters like Safaricom or Equity or KCB, we are told that in general, foreigners are also starting to retreat from the Kenyan market.
If you look at the volumes after around February this year, moving on out of the first quarter into the second quarter, if you look at foreign activity, it was rather subdued compared to other years. A shilling losing value also was not a good antidote for them to come back into the market. Your returns will basically be eroded on the currency front. With also their stock markets internationally going up, it's less riskier just to invest in Microsoft or Coca-Cola on the US bourse than to try and get the extra return on the Kenyan bourse, which is not giving so much returns. So you find foreign activity has been limited and naturally will be limited. Today it was down 63% vis-a-vis what it was the other day.
Right. I mean, obviously foreign investors are looking for yield, and that's why they come to emerging markets, irrespective of the recovery we're seeing modestly, we must add, in Europe. That then raises the question of government securities in Kenya. That's tended to be where investors would go if equities are not doing well. But as you're saying, macroeconomic fundamentals, high inflation over 14%, the shilling looking a lot better in the region of 89 shillings. But is there a sense that the government has a grip on policy and growth prospects and plans?
No, not really. If you look at how the shilling was allowed to free fall and the excuse that was given on the shilling free falling, if you look at where interest rates are going, if you look at where inflation is, and there's really no tough policy measure that is coming out. Most of these things actually happened before the fiscal policy was announced. And the fiscal policy came in more of an expansionary fiscal policy. And on the side, you have a central bank that is pursuing a tight monetary policy. So the leg of coherence between these two policies just tells us that the government is not really in control of these indicators and these fundamentals.
All right, let's talk about what we're seeing on the equity side. Mashudu did refer to the fact that Trans Century will be listing next week. Its IPO coming out next week. Sense of valuation for the company, because really and truly that's what the company's been looking for. A sense of how the market would view them, what their share price would be.
They're going to do it by introduction at 50 shillings, and basically their basis is that's the valuation of the company, and that's how it last traded over the counter. The issue is there going to be enough demand for it at the same time as investors are also waiting for the British American investment company IPO. So when you try to weigh the two, you're trying to see where will I get the best liquidity, where will I get the best transparency, and most probably where will I get the best returns. So that's the factor that will happen. They will have first move advantage for coming into the market. But I think 50 shillings introduction price, they're really targeting institutional investors and foreigners, not the retailers.